loans. So Juan says, my wife needs to pay back about 120,000 of student loans. We have 170,000 invested in the stock market, which is amazing. We both max out our Roth IRAs every year. I've got a 401k with a 6% match. I'm doing the 529 account, all that fun stuff. But my question is it a good idea to use dividend stocks to pay back my student loans each month? I want my assets paying for my student loans, but I'm not sure the best way to go about this. Robert and I are always going to tell you, if you can have an asset paying for your debt, like that's cool. That means the asset is a good asset. It's cash flowing. It's supporting your lifestyle, whatever that might be. We believe the NEOS funds do a great job of this, right? They're always paying back about 1 to 1.2% on a monthly basis, which annualizes to 12 to 15% depending on the fund. And they're very tax efficient. So I would say if you really want to do this one, check out the NEOS funds. But here's the mistake you don't want to make. You don't want to make the mistake of going further into debt to try and roll the dice on an asset that you don't know will or will not cash flow. So for example, if you told me you wanted to go borrow $250,000 to buy a cash flowing business or something that's, around you that you think is going to not just pay off your student loans, but put some extra money in your pocket, I would say like that could be a good idea, but it seems like a dice roll in the sense that one, is this business actually going to pay you back enough to cover your student loans and your time and energy for running it? But number two, you're now going further into debt when the whole example here was to get out of debt. So for me, it really comes down to how you implement this. I think the NEOS funds are probably your best bet. They pay consistently, they pay monthly, it's tax efficient, they do a great job of that. So one, if I were you, I would look into SPYI or QQQI, maybe IYRI as something that could begin to supplement your monthly income if you want to stay invested that way. But Robert, what's your take on this, right? Going into buying an asset to try and use it to pay off debt.
Yeah, I mean, first and foremost, Juan and his wife are killing it. It's awesome to see. We love it when people have a plan, but I feel like this strategy that Juan is asking us is a little too fancy for me, because then you're adding additional risk to try and pay something off. And we have incomplete information because we don't know what the interest rate is on these student loans, but let's assume the interest rate's 4 or 5%, which is pretty traditional. If we look at it that way, I think you nailed it. I would probably look at doing the NEOS funds, the ones you discussed, because I think that is the best strategy. And if they didn't like that idea, I would do a public high yield savings account making 4.1% right now as of filming, and assuming the student loan debt, the interest rate on that is 4.1%, then you're putting yourself in a good position where you're not adding additional risk to the equation to try and have your assets pay for the student loan debt. But I think you guys are doing a great job. Austin, you killed it. I love the idea. That's exactly where my brain went, was like SPYI or QQQI. So I think that's the best strategy. And Juan, just don't get overly fancy. Obviously, you're doing a great job. You guys are really laying the groundwork for your future. And we just want to make sure you don't go backwards by overcomplicating something that is really, really smart to do.
Robert, I don't know if it was during a Rich Habits Network live stream, or maybe it was during a podcast episode recently, but you were talking about how people always want to get fancy and they think they're like in an action movie or something, and they always got to be making moves and like dodge, like the Matrix, dodging bullets and all this crazy fun stuff in the markets to be successful. And you just nailed it. And Juan, I hope you take this advice. You don't have to be fancy, right? Sometimes the fanciest, craziest things are sounding so fancy because they're scams, right? Like there's some crazy ways that people try and make money out there, and turns out if it's hard to pronounce, you probably shouldn't do it. What's really important to remember here is, Juan, you achieved $170,000 invested already. You've got the Roth IRAs, the 529s, like you're doing all the right things already. So just continue to do that, but also pay off some of the student loans. That's the most important thing to remember here, is you've already laid the groundwork and done the important steps to get yourself to a situation where you can pay off these loans without feeling bad about it.